Hi everyone, this video is going to be on the indirect cash flow method. I will have a separate video for the direct cash flow method, but this video is specifically on the indirect cash flow method. I would like for you to have your book open to page 634. So I have a loose leaf book in front of me, and I felt that it would be easiest, just because the cash flow statement can be difficult, I felt it would be easiest for me to explain it directly from a problem from your textbook. So I am going to go over how to complete exercise 11-19A. So work with me step by step. I do have the answer out there, but please don't look at the answer until you've walked with me step by step. So the only thing I want is the book open. I don't want any answers. Okay, so when I have the book gives you an income statement for Barnaby Travel Products Incorporated, and they give you a balance sheet for that same company. When you do the indirect cash flow method, the first item you start with for the operating activities is net income. Okay? All right, so let me step back and let me show you what a cash flow statement looks like. So over on the board, a cash flow statement will be broken out with operating activities, investing activities, and financing activities. And after you figure out all those changes, you will come down to a total, which is a net cash either increase, well, this is financing, a net cash either increase in cash or decrease. It's a total change. You will then add in your beginning cash balance and your final cash. So again, the cash flow statement explains what happened in the cash account only. It only cares about items that affected cash. If it doesn't touch cash, then do not put it on your cash flow statement. I promise you, I'll point out items that do not touch cash, but they will put that in this particular problem. Do not put those items on in your cash flow statement, or you will not tie out. Okay, so before we even begin, let me show you how you will tie this out, okay? All right, so go to the balance sheet for the particular problem, and I want you to take your calculator. Before we even begin, I want you to take the changes. So take the balance sheet, and you will notice from 2017, it's showing $33,200 for cash. 2018, it's showing $170,000. I want you to take the difference between those two accounts, and you will get $136,800. So when you subtract $170,000 minus $33,200, you get $136,800. Next thing, I want you to eye it. From 2017 to 2018, did cash go up or down? Cash went up. So show $136,800 positive. This is your check for the cash flow statement. Your check for the cash flow statement, your beginning and ending cash, the change, should always equal the total that you derive for your cash flow statement. I'll show you that check after we're done, but before we even begin, you must come down to $136,800. Now double check your numbers, because don't transpose and then you get frustrated because you're not tying out because you made a mistake in the beginning. So take your time. Okay, next thing we're going to do before we even put it together, we're going to look at accounts receivable. Well, accounts receivable in 2017 was $63,000. In 2018, it was $47,000. Just take the change between the two. That is $16,000. Next thing to look at, be careful, go slow. Did accounts receivable go up or down? Accounts receivable went down. Show that in parentheses for now. Okay, we're going to do something different with that later on. Inventory, what happened? Well, in 2017, it was 72,000. In 2018, it was 30. It went down. Okay, 42,000. So show that in parentheses, 42,000. That's the change. Prepaid expenses. 2017, it was 8,800. 2018, it was 9,000. Just take the difference between the two. It went up. It's a positive 200. Show that positive for now. We go to current liabilities. We're going to analyze accounts payable. In 2017, it was 19,000. In 2018, it was 34. Take the change between the two, 15,000. Eye it. It went up. Show that positive. Then we say accrued liabilities. We're going to take 35,000 minus 90. It went up. We're going to show that positive. Okay, do that first. And now we're going to put together this statement of cash flows. Okay, we're going to start with our operating activities first. Okay, all right, now I went over that last video. We went over the indirect method. And I told you, don't fight the rules, okay? So indirect, what do you always start with? You start with net income, all right? So I look at the income statement. What is the net income? Well, it's 39,000. So I start with net income, and I write 39,000. That is a positive number, okay? Next thing I do, go in order so you do not forget. I look to see on the income statement if there is any gain or loss on a fixed asset. There is not. So I do not need to include that in this particular cash flow problem. Next item I look for that I will always add back, and that is depreciation. Why? Because depreciation does not affect cash. It is already in this number. So I want to take it out. So I'm going to do the opposite of what I normally do. So I write depreciation. And remember, that's the expense, not accumulated depreciation. Depreciation expense. I look, how much is it? It is 28,000. I'm going to add that back in. Okay? All right. Now, I'm going to go back to my balance sheet, and I'm going to work with what I had originally completed before we put this together. Remember, we took the changes. Okay. So now I'm going to list my current assets. My first current asset that I will list is accounts receivable. Remember, cash is going to appear way down the bottom, okay? All right, so accounts receivable. Okay, I write in what the change was. The change was accounts receivable decreased by 16,000. Remember the rules, don't fight them. If current assets increase, remember, they're not logical. So if they increase, I'll show them negative. Well, if accounts receivable decreased, it's not logical. I'm going to show that positive. So I go over here and I write accounts receivable, but I'm going to show that positive. Okay, I go to the next account, which is inventory. Okay, inventory, I look, it decreased 42,000. It's not logical, so I'm going to show that positive. So inventory, I show positive. Okay, next I go to prepaid expenses, another current asset. Prepaid expenses increased 200. It's not logical, so I'm going to show that negative. So prepaid expenses I show positive. Okay? No, I'm sorry. Prepaid expenses increased, I'm going to show negative, right? Because it's not logical. All right, so now I'm going to take 39,000 and 20, I'm going to add in 28,000, add in 16,000, add in 42,000, okay? And then I'm going to subtract my 200. However, I'm also missing my current liabilities, all right? So I got to add my accounts payable. Accounts, running out of room. Okay, accounts payable is a current liability, completely different than current assets. So I look, what happened to accounts payable? The change was 15,000. It's positive. That will be logical. All right, so accounts payable, I show positive 15,000. Next, I go to accrued liabilities. Also a current asset. I look, what happened? Well, the change was positive 55,000. It's logical. It will show exactly as it appears. So I do accrued liabilities, positive 55,000. Okay, now I total it down, all right? Basic math skills, so 39,000 plus 28 plus 16 plus 42 minus 200 plus 15 plus 55 equals 194,800. Okay? Now, the lab will make you do a subtotal. So here's the subtotal. The subtotal between all these, okay? And we'll bring this 39,000. This is a total. The subtotal between all these is 155,800. Okay? But your total for operating activities is 194,800. Take your time with this. It's easy to make a mistake, so make sure you go slow. All right, now we finished operating. So now we're going to take the additional data to work on investing and financing, okay? All right, so A through F, we're going to do with the additional data, okay? Let's go through A first. Acquisition of plant assets was $156,000. Of this amount, $104,000 was paid in cash and $52,000 was financed by signing a note payable. One more time, they threw all those numbers at us. When is the only time an item goes on the cash flow statement? Correct, when it affects cash. Well, what's the only amount that affects cash in this? Acquisition of plant assets was $156,000. Of this amount, $104,000 was paid in cash. Boom, right there, $104,000. All right, so what did they do? They acquired plant assets. Plant assets all go in the investment section. These sections will make sense. So what did they do? They purchased plant assets. Well, cash went down. So what do? I go over here and I just put acquisition. That's just purchasing. Acquisition of plant asset. Okay? And that's 104,000. Take your time. Show that negative. Okay, make sure you put those parentheses or you'll forget to do that. So that's the answer to A. Let's go to B. Proceeds from the sale of land totaled $39,000. Proceeds means they received cash for the sale of land. Proceeds for the sale of land totaled $39,000. Land is a plant asset that's going to go in investing. They sold it, that means cash is going up. Okay? So just call it proceeds from sale of land and $39,000. Now show that positive, right? Be very careful. All right, now let's go to the next one. C. Proceeds from the issuance of common stock totaled $31,000. Again, proceeds is just cash. So they issued common stock for $31,000. Okay, so what do? Proceeds from common stock is $31,000. Show that positive. Okay? All right, D. Payment of a long-term note payable was $16,000. Remember, I told you note payable will always go in the financing section. All right, payment of long-term note payable was $16,000, and it was a payment. This section makes sense. They paid cash. I find my financing section, which is right here. Okay, payment for note payable. Okay, and that was $16,000. Be careful. Show that in parentheses. That's a payment. All right, take your time. Now we go to E. Payment of dividends was $8,000. That's a cash dividend. Payment of dividends will go in under financing. So payment for dividend. That goes under financing, and I show that negative. Okay? All right. So that's my additional data. Now, I'm going to double check my math. So I've analyzed all my additional data. Now I'm going to figure out my totals. How much for investing? I had a negative 104. I had a positive 39,000. So the net effect of those two is 65,000. And that's a negative number. Be careful. Now remember, the total for operating is 194.8. Total for investing is negative 65. Now I work on financing. I have a positive 31. I have a negative 16, a negative 8, okay? And the net effect of these is a positive 7,000. Now I draw a line, okay? So that's my financing. Now I draw a line, and I'm going to do my net change in cash. How do I get that? Well, I take my total for operating, 194.8, which is a positive number. Subtract out my investing, negative 65. And I add back in my financing, which is 7. When I do that, my net change in cash is 136,800. I can add this now. This is an increase, right? Net increase in cash. Remember this number? That's your check. We did that in the very beginning. So be careful that you check that. Now, that check is only to make sure that you've explained all the different cash. That check could catch if you included something in this that shouldn't have been. So for example, if you included that 52,000 that was in additional data A for that note payable, that's what you could have caught. It won't catch if you don't understand what's in operating and you put it in financing. It won't catch that. So be careful that you know what items go in each section. Okay, so now we've got the 136,800. Then I'm going to look back at the problem and I'm going to find the beginning cash. Well, what's the beginning cash? The beginning cash, go back to your balance sheet. Your beginning cash was the 2017, which is $33,200. Now you double check your math. Add in the change, 136.8, plus the beginning cash, and don't look till you're done. It better equal 170,000. Now, where do you find the 170,000? Correct. You find it on your final cash balance. So that's how you complete the cash flow method for the indirect. Now, they're going to ask you, evaluate the company's cash flows for the year. In your evaluation, mention all three categories of cash flows and give rationale for your evaluation. Okay? All right. They're also going to ask you if there is a non-cash investing and financing. There is. Everybody look at A. See where it says $52,000 was financed by signing a note payable? Well, that hasn't touched cash yet. It will eventually when they pay it off. So that's an example of a non-cash investing and financing item. Okay? All right, but they're asking you to analyze this. All right, so we're looking at operating, $194,800. What's the most important section of the cash flow? Correct, operating. This is very strong. This is a very strong company. Nice positive number for operating. You can tell if you want to invest in a company that's not doing well. If they have a negative operating, watch that company. Kind of avoid it. I would stay away. I'm not saying to totally write it out, but just be careful with your money before you invest in a company that has negative operating. It might not be around too much longer if it keeps at that. All right, investing, I can see, okay, they invested in plant assets. They sold some land. That's good. That's not a bad thing. Even though that's negative, they're investing in the company. Let's see. For financing, they issued common stock. That's not bad. They paid down their notes payable. They paid out dividends. That's very good. This company looks very strong. So that's how you analyze the statement of cash flows. So that is the indirect cash flow method that you will have to do a similar problem in the lab. Okay? All right. Again, I'm going to have a separate video for the direct method. Good luck in the lab.